Hello everybody, welcome back to DeFi Supply. Today I want to talk about UST and what happened to the peg today. So today's May 9th, 2022, and today UST depegged all the way down to 69 cents earlier this afternoon. Right now it's currently trading at 91 cents. By the time you see this video, it might be completely different. It might already be back to $1. I expect over the next couple of days that it will trend closer to $1, but for now we saw a pretty significant depeg of UST. So in this video I just want to talk about what happened to UST, what was supposed to happen to UST besides the obvious, and then finally why the UST peg broke. So this was a screenshot taken earlier today at roughly 90 cents. So you can see that we just completely dived down to 70 cents, a loss of about 30%, which caused hundreds of millions of dollars worth of liquidations on Anchor. Kujira premiums on B Luna were getting up to like 20-25%, which is pretty insane. The B Luna ARB, which is basically you trading between Luna and B Luna on Anchor, got upwards to 20-25%. So for every Luna that you traded, you would get 1.25 B Luna back, which is just unprecedented. The highest I saw before was probably 8, 9, 10%, not 25%. So it's pretty insane. Coin market cap also shows the what happened to the market cap. So we ended up losing about $5 billion worth of the UST market cap at the peak of this flash crash. So during that time, $5 billion had to be accounted for between the Bitcoin reserves and the Luna seigniorage between UST and Luna. So roughly $5 billion worth of Luna either had to be minted or covered by the Bitcoin reserves that LFG or Luna Forward Guard was holding. So first, a bit of context. So LFG stands for the Luna Foundation Guard, and their goal is to implement procedures that maintains UST's peg at all costs. And one of the reasons that they wanted to create this foundation was to build this reserve fund to basically come into effect during scenarios like the one we saw today. And their goal was to accumulate about $10 billion worth of Bitcoin, according to Do Kwon. And they got to about $1.6 billion worth, but they weren't able to make it to that in time. So you can see from this chart here that it peaked at 1.6 billion, and then just towards the end of this chart, it's gone straight to zero. So they've actually used most of their Bitcoin, if not all of their Bitcoin, to bring UST's peg back. And they basically sent that Bitcoin to a OTC trader, which stands for over the counter. And basically their role is to basically execute really large swaps between Bitcoin and UST. On May 5th, they announced that they acquired $1.5 billion worth of Bitcoin, basically through their partner Genesis Trading, which was a massive amount. It increased their total reserve by, it basically almost doubled it. And then on May 8th, they noticed that UST was starting to depeg. At this point, UST was at about 99 cents, 98 cents. And so they basically took the UST reserves that they still had and the Bitcoin reserves that they just acquired and basically gave that back to their OTC partners, which effectively provided them with liquidity to basically trade between UST and Bitcoin, basically to maintain UST's peg. And essentially what this is is just them taking a large amount of UST and Bitcoin and just putting it into a liquidity pool, basically. It's just a liquidity pool, but just for centralized trades with these OTC trading firms. So there's lots of speculation on what's kind of going on between these OTC trades. NapGeneral on Twitter found that Genesis Trading was taking the Bitcoin and swapping it for UST to try and maintain UST's peg. But then, with that UST that they accumulated, they ended up dumping it near the bottom and just selling it spot trading just throughout the week, which caused a lot of selling pressure. Because the problem is that this UST is not disappearing when they're selling this Bitcoin. It's still there because they haven't actually haven't implemented this burning feature that Do Kwon and LFG has been working on. Right now, this is just this temporary fix that LFG is trying to deploy in order to keep UST's peg. Now, given that context, now we've arrived at the UST flash crash that we saw today, otherwise known as the Death Spiral. So basically, the Death Spiral happens when there's a combination of characteristics in the market. The first one is it's a bear market, so most digital assets are volatile, one of them being Luna. So the Luna value will decrease, just because it's a bear market. All cryptos are decreasing in value. That's not a problem. The problem happens when people see Luna value decreasing and those holding UST sell from fear of the peg breaking, because if the peg breaks in the Luna ecosystem, then they're going to lose a lot of money, and Luna's going to just continue to decrease in value. So in this case, UST holders are selling from fear of the peg breaking, and that drives down the UST price to below $1. And if UST price is below $1, more Luna is minted in order to compensate UST holders to burn their UST, thereby keeping UST's peg. But what that does is it decreases Luna's value even more. And so if Luna decreases in value even more, then more UST holders are going to get freaked out and want to sell their UST as well. And so what happens is this happens so much that now UST price is, in the 90s, like 98 cents, 97 cents, and there is just not enough volume to keep up with the UST selling. Additionally, there are parameters set to where the Luna has a max amount that can be minted, as well as UST. And this was done to protect basically investors from market manipulation, which is a long story, but I just want to give just a brief overview of how this works. So ideally, what's supposed to happen, or what the vision of these new mechanisms were by LFG, was that you have a seigniorage model where you can trade 1 UST for $1 of Luna. You also have a 21-day unstaking period for Luna, so people don't panic sell their Luna in the event that this happens. And then additionally, if the Luna value is decreasing at a rapid rate and people don't want to basically burn their UST for Luna, they can choose to burn their UST for Bitcoin. And so we've been able to do it now, but only through OTC trading firms, not individuals. And so I think that was one of the contributing factors to what happened today. And then finally, after implementing Bitcoin, there were also plans to have Avalanche reserves, Solana reserves, and Ethereum reserves, and a couple others, but these were kind of the main ones that they were considering, starting with Ethereum. And the idea with this is to basically diversify a set of reserves so that it takes off the selling pressure of Luna by basically incentivizing people to burn their UST for these reserve assets. And so that causes Luna price to not drop as much, and it also helps UST holders gain more confidence that UST is going to maintain the peg because Luna's not dropping as much, and they can always trade their UST for a reserve asset that will definitely not drop because of Luna. Bitcoin will always maintain its value. It's not going to drop in value because of the Terra ecosystem. But what happened in this case was these two mechanisms at the bottom weren't implemented yet. So LFG has Bitcoin, but again, they're only doing it through OTC traders. They're not doing it through individuals, which I think was one of the biggest contributing factors of what happened today. And also, they don't have $10 billion worth of Bitcoin that they were planning to have for an event like this. They didn't have enough time. Additionally, they didn't have enough time to implement other reserve assets like Avalanche, Solana, and Ethereum. But they did still have the 21-day unstaking period, which I think helped people to hold on to their Luna and not panic sell. And then they still had the seigniorage, but Luna was basically taking the full brunt of UST depegging. Thankfully, LFG had Bitcoin in reserve, so they were able to lessen that impact. But still, Luna was impacted quite heavily today, given its decline. I think it declined over like 50% today. So Luna holders definitely took a hit. So just to kind of recap kind of what the aftermath is after this UST peg, just from my thoughts. So the first one is LFG most likely used most of their Bitcoin reserves to recover the UST peg. But while that is good to maintain the UST peg, that's the number one goal, right? But they also are going to have a Bitcoin loss because they've accumulated this over the past few weeks. And Bitcoin has been sliding in price the past few weeks. So they're going to be taking a loss on Bitcoin, but at the expense of maintaining UST's peg, which I think is definitely more important. But again, it's not a good thing for them to lose money on Bitcoin. The second thing is UST peg confidence will likely be shattered for a while. So when a stable coin drops over 30% in a single day, it's really going to kind of, I think, give people a bit of a PTSD about this day. And so it's going to take a while to shake that off, or it's going to take a lot of new mechanisms like adding extra reserve assets to change people's minds to come back to the Terra ecosystem. And then the third one is Luna holders' value is going to be quite devastated from this death spiral and any future death spiral until there's more mechanisms in place to protect them in the event that this happens. I think that UST will still recover, but at Luna's expense. And this has always been advertised this way. Luna holders should know that, you're basically maintaining the peg on UST. But I think that this will be prevented in the future once these new mechanisms are put in place. So looking forward is, I want to know kind of what LFG's thoughts are on this peg and after it's been restored. And I also think we need more transparency on these OTC trades by Genesis and any other partner, because ideally the goal of this UST stablecoin was to have a decentralized way of sending money from a stable point. And the way that they're maintaining this peg is not in a decentralized way, at least with Bitcoin. It's not. Swapping it with Luna is in a decentralized way, but not with Bitcoin, just not yet. The second thing is they definitely need to expedite the reserve asset functionality where anyone, not just OTC traders, can swap UST for another reserve asset. And then another one is to basically have new ideas to keep UST peg from going over 5%. I don't think that having a peg disparity of over 5% is feasible for the future. We cannot have 40% disparities occur because many people are using UST as collateral, borrowing UST, using UST in stablecoin pools, and you know that it's going to cause a lot of confidence drops going forward if we continue to have these disparities. That's all I had today. If you want to follow me for more, you can follow me at DeFi Supply on Twitter or DeFi Supply on YouTube. Thanks, everybody, and I'll see you next time.